Good evening, everyone. Futures Brizio here. It is 9:30 p.m. on Thursday, June 27th, and I did a wrap-up video earlier this afternoon, right before the market closed. But what I wanted to do now, just briefly, is again just run through these three markets that I look at here, and just show you kind of using the Heiken Ashi Smooth and just market structure, how you could have traded these today. Even though they, other than maybe copper, we didn't really have a good um, patterns in terms of trending, but there still was opportunity. So let's just run through these. I'll try to keep this really short. Before we get started, make sure as always you smash that like button and subscribe to the channel, ring the bell notification so that you get notified when I make new content. And of course, any questions, comments, please leave them down below. Okay? So let's just get right into it. So we'll start on copper because this was probably the best of the setups. And again, guys, this yellow line represents 7 a.m. New York time. It doesn't mean anything except that that's about when I get on my chart. So when I go back and do like back testing and review my trades, I just kind of have a reference point to what the market was doing going, into the morning session when I start looking. So that's all this means. Okay, this is like I said, this is 7 a.m. New York time. Okay, so coming into the session, we did see price was making new higher highs. We had this trend that had started during the overnight hours, and you can see, we were putting in higher highs and more, and really in particular look at the higher lows until we got up to here. And then see, we put in this high right here, and we put in this high right here. If we turn on the candlesticks for a second, we did actually put in a new high right here. It was a big wick, but it was a new high. So this is kind of where market structure sat. Okay, and so if we look at market structure rules, right? Well, where was the last swing low before the new high was put in? Well, that would have been right here, because this was a new high. All right, it wasn't by a lot, but it did put in a new high, and that's where I told you guys you still have to kind of look at your candlesticks once in a while. But you can also see here that price was running into momentum issues with all these wicks on the Heiken Ashi candles on both sides here. Just, where price went up, came down, tried to go up again, and just barely eked out a new high. But all the while, the bullish candlesticks have wicks on both sides, indicating that that upward price momentum is really running out of steam. And you can see on these few little bear candles, they actually look more impulsive, even though there was only a couple of them. So anyways, so you could have just drawn a line right here, say, okay, this is the swing low, and if we turn on the candles, if you want to be exact to where the low actually was put in, it was right here at this low on this candle. So we'll just do that. We'll turn off the candlesticks again. Okay, and you can see exactly what price did. Okay, it came down, it broke this level. All right. It broke through right here, came back, all right, and then tried to rally back, failed again. So anywhere from this area right here, or this little bear spinning top doji candle right here, to any of these right here where it breaks back through, and you can see the strength of these bear candles. There's no wicks on top. They're flat top bear candles, which means, it's pretty good heavy price momentum. All right, and price, you can see, crashed down the rest of the day, and then late in the session it just started moving sideways. But really from about this point on, you just ignore it, because that's the late session and into the where we are now in the overnight. So this is a perfectly good bearish trade that you could have used. Now coming into the session, in terms of being long the market, so we had price putting in higher lows overnight. So this was the first swing low right here, and this was a higher low than this low. So this could have been a nice long trade. Now of course it didn't go very far, because then we got into the situation where we started breaking structure. But ideally this actually is a good trade to the upside, and then price kind of ran out of momentum, and then we started going down. Okay, so two real quick trade examples on a 5-minute chart that you could have done with copper. Okay, and we move on to gold. So again, here's gold coming into the session today, and then this line I just marked off basically the end of the day session. So again, the gold was pretty quiet today, quite frankly. But you can see coming into the session, we were putting in higher lows and higher highs. So in terms of where you could have entered this, well, right at around shortly after 7 o'clock, we had this little pullback. Here's one entry. And then we had another one here. You can see the Heiken Ashi bear candles. And then you had another one here, and you had another one here. And then we got up to here. We started running out of momentum, okay? You can, again, see the Heiken Ashi candles, the bull candles with wicks on both sides. However, if you look at market structure, okay, where here is the swing low? Well, it's right here, right? It's right here. This was the last swing low that was put in before this new high. Again, let's look at the candlesticks. So here's the low. So we extend this out to the right. What do we have? Well, we had price come right back to it, okay, and then started going up. Now, again, it's late in the session here, so there was no volume, and yes, price did start going back up again, but it really didn't go anywhere. But, you know, so this time of day, let's see what time this was. 1850, so that's, call it 1900, so that's 5.5 hours after the New York Open, so that's like around 3 o'clock. So by that time of day, things are pretty much done anyway, so probably wouldn't have taken this trade anyways. But if you wanted to, you could have, because again, what did it do? It came right back to the market structure. So all you had to do was just mark off this swing low and then just wait. And now if price broke through here and then maybe came back and retested, it would have been a good short. Now here we are, just as a case in point, we're into the overnight session now, and I don't trade this session, but if you look what's going on right now, we have broke through it here in this overnight session, and now it looks like we're trying to come back up and retest this, and it'll be interesting to see if this kind of falls through for the rest of the night. Okay, so, but you can see exactly what's happening. It's just extending into the overnight hours. But, you know, again, the market structure tells you the entire story. Okay, and then lastly, we'll look at the Dow. So this is the 5-minute chart again of the Dow. So again, coming into the session today, we were heading down. Okay, well, I would say we're running sideways. And then this is very typical where you have the large banks will push the price down only to go the opposite way. So they start selling, they break out these structure levels right here. They get retail sellers very early in the session, because this is only, yeah, this is right at the open. This is 9:30. This candle right here is 9:30, right when it opens. So you can see what they do. They come into the market, they push it down. They push it down below these levels right here, fool the retail traders and thinking, hey, we're going to have a down day. And what do? Bam, they shoot it up. Okay, so you had this little push down, and then we rallied up. So as soon as this area was taken out, this would be a good area to take a long, because they kind of tip their hat at that point, and you know that they want to go higher. Look at the momentum on these candles. So right here, you know, you could have entered on a break. You can see we had a little pullback right here, well, with these bull candles with the wicks on both sides, and then price just kept going. But let's talk about the reversal. So then we came up here and we came down. We tried to put in a new high once, failed, came down, but we did put in a higher low, tried to come up again, failed again, and then boom. So this technically was your structure break. Where was the last swing low put in? Right here, okay? This was the last swing low right here. If we look at the candlesticks, it's right there, okay? So there was the last swing low. This did go up, and basically, I'm not sure if it put in a new high, but it basically equaled this old high. So this was your swing, okay? And so as soon as this broke right here, okay, we really didn't get any pullback here. It just went straight down, all right? So there you go, okay? Now, if this didn't convince you, and you're like, well, you know, this is a big pullback, could I have gotten into this sooner? Well, you see this little line I have up here. This is off the 1-minute chart. Now, I'm not recommending you do this, excuse me, but if we go to the 1 minute and we look at this area right here. So I'm on the 1 minute. I gotta turn off my scroll here. Let's scroll back. So here's that area on the 1 minute. Well, we went in and put in this new high right here, And so this is the swing on the 1 minute chart, and then we broke structure. So theoretically, you could have entered right in here. Now you can see what happened. Here's those two attempts to go higher. We have one here and one here. This is what we saw on the 5 minute chart. And if we turn on the candlesticks, depending where your stop loss was, you may have just avoided being stopped out. Okay, because you can see price came up once, came down, came up a second time, but it did not take out these highs up here. So maybe you would have been lucky and not been stopped out, and you would have just had to hold this through, you know, a couple of hours of drawdown here, or break even at best, and then finally it broke lower. But you didn't really need to do that. I mean, that is a more precise kind of sniper entry, if you want to use that phrase, on the 1 minute chart. But you certainly could have just used the 5 minute on this original structure break right here, on the break of this structure, on this last swing low before this high was put in. And, you know, what did you give up? You gave up from basically this area to here, right? Because there's that 1 minute zone up here, and then this would have been your actual entry. So these first couple of candles on this down move you would have given up, but you still had a nice impulsive move. And then you can see it came all the way back down to where we started the morning, down here, and then it rallied all the way back up to where this breakout was, this previous support now coming up and acting as resistance. And then of course we just kind of like petered out the rest of the day. This was probably some profit taking, and then again the market just kind of faded the rest of the afternoon. So anything really beyond this area is, you know, just ignore it. So, but again, the point is you know, using these structure levels just off the 5 minute chart, to find entry points. And if you're looking, you know, if you were looking to get involved with this move to the upside, you know, this area right here, you can see all these wicks on the 5 minute. This is going to be a pullback area on the 1 minute. So again, if we'll go back to the 1 minute chart, again, we're going to turn off the scroll. We'll go back. Okay, so here's that area on the 1 minute, and there you go. Here's that old swing high from the overnight that we broke right here. So this was an entry right here. Okay, you can see this red candle right here. And if you missed that one, then we broke out and we came right back to it again. So this was an even more obvious place to enter. So right here, and if worse comes to worse, right here to catch the rest of this move up. So okay, again, this is the 1 minute chart, which I'm not necessarily recommending you do, but you know, if you're not seeing those pullbacks on the Heiken Ashi candles on the 5 minute chart, you can step down to a lower time frame. Just remember, you're seeing a lot more noise on the lower time frame, and although in hindsight this looks very easy to see, in real time might not be. So you have to kind of make that decision, you know, to say, hey, am I going to go lower than 5 minutes? And if I'm not, then understanding that there might be times when you're going to just leave trades on the table. And so this little uptrend move, maybe you left it on the table, but you were able to come back later in the session and take this down move right here when the momentum ran out and broke through this level. So even though you might have missed this one early on, you know, maybe you probably, if you had followed, you know, what was inside this rectangle, you missed about half this move up anyways, because you wouldn't have been involved until somewhere inside this rectangle. So you did already miss about half the move. You know, from this low to the top of this rectangle is, you know, we'll call it 11.5 points, and then from here to this high is 10 points. So this is actually, yeah, it's about half of this you would have left on the table anyways. But if you had taken this one at the break of the structure level, you would have picked up almost 16 points. So this is actually a better move down anyways, and it's more impulsive. So again, guys, you have to just kind of, you know, weigh how much you want to be involved and you know, how much you're going to go hunting for trades. The 1 minute chart is extremely noisy. It moves very fast, and it can really play a lot of psychological tricks on you, even with the Heiken Ashi candles. So again, but I'm just pointing out where you could have kind of sniper entered these a little bit and maybe found some areas where you could have still been involved with this long position. When you start seeing it throw all these wicks, this is a 5 minute chart, so you certainly have time to watch these play out. You see, you know, we have 1, 2, 3, 4. We have at least 20 minutes here where price was doing nothing. It was wicking to the top, wicking to the bottom. We had these candles. Within that time, in that 20 minutes you were watching this, then you could have stepped down to the lower time frame and found an entry that you could have used on the shorter time frame if you really wanted to be involved with this to the upside. But then again, to the downside, the 5-minute entry was right over here. The 1-minute entry was up in this area here. But again, it all just depends on how comfortable you are with, how comfortable you are with using the 1-minute time frame structures versus the 5-minute, which I guess you could argue is a more stable entry. Just what they always say, the higher the time frame you go, the more reliable an entry signal is. I'm not sure if that's universally true, but it probably is true in a lot of cases. So anyways, guys, that's really about it. I just wanted to show you just, very simple without any indicators. Well, the Heiken Ashi Smooth is technically an indicator, but basically just using price action and these Heiken Ashi Smooth candles and, turning on the regular candlesticks when you need to, you can actually find some good entries. And again, using the Heiken Ashi Smooth just gives you a clearer picture. You don't have to. You could do exactly what I just did using the regular candlestick chart or regular Heiken Ashi candles or bar charts or whatever. But I just like this because it just takes a lot of that noise out and allows you to very clearly see the structure levels and the pullback areas and kind of ignores the more minor ones that maybe don't really mean anything. But again, you still need to turn on that candlestick indicator once in a while when you're trying to fine-tune a zone or again, an entry area or a stop loss or take profit area. Again, I'd say it 100 times. You still, just because you're using this doesn't mean you completely ignore the candlesticks. It's just that once you kind of get a good feeling about where those levels are and your zones are placed and your take profit and stop loss areas are marked, turn them off, turn the candles off, go back to this indicator and just let it rip. And it's just easy to find those turning points this way. So all right, guys, so I will leave it there. I hope you have a great night. Maybe we'll be back tomorrow if there's anything. Tomorrow's Friday, so you never know how Fridays are going to go. Sometimes they're really excellent, and other days there's absolutely nothing. So we'll check that out tomorrow and see how things go. And if there's anything worth noting, I'll jump back on. All right, guys, again, smash that like button, comments, questions below, and I will talk to everybody soon. Have a great night.